The S&P market is probably going lower. Today's March 18th. Market stabilized as expected last week. It had the bounce into the 17th as expected. Now it's going down again. This could be the fifth wave of the decline. If so, it could be very dramatic or not. We don't know. We do know that the likelihood is we're going to go lower until at least the 25th, potentially even the end of 30th of March. We also know if it's going to be a very big thing, it will be over by the end of March. And then most of the super bearish cycles start to go up anyway for a number of months into the future. If it isn't going to be a big decline and just makes a peripheral new low on this fifth wave, we'll stabilize, have another low late April, and then go up. So the only thing to do right now is emphasize the bearish side until the end of the month. Also, recognize that the market's not really going to go bullish until after the end of April. The 18.6-year cycle is unbelievably beautiful. Every single time it got to this point in its development, the market had a nasty decline. It had it in 2005, it had it in 1987, had it in 1969, even in 1931. From late February to June, the market fell 37%. If this were the only cycle in the game, I would be extremely bearish. But there are other ones that are based upon 20-year and 60-year patterns that indicate we're going up into August before any major bear market starts. However, we should stabilize by the end of April, whether we go down hard or not, and then go up. So the other cycles we continue to look at, again, are 162-week cycle, which is still lower, goes lower until late April. The 147-week cycle, which goes lower until late April. But most of them stabilize at the end of March and then don't go much lower. The 11.6-year cycle that we mentioned last time, which has been the best match the last 6 months, basically does not go much lower, maybe a little bit over the next few days. Then it shoots up into early April, comes back down into late April, then it goes up. So the time is not up in terms of the consolidation period, even after the low. It could go on for another month. However, we don't know. The next 2 weeks still could be very bearish. And if they are, you want to emphasize not going long yet. And if they are not, then wait until the end of this month. And then you could consider buying and maybe buying some more late April, early May. And then we should have a decent rally over the summer. We're looking for much higher prices after this collapse, after this decline. And we're not sure exactly where the low is in this decline. However, wherever it is not the beginning of the bear market. We're going to have a very strong rally for a few months, at least, after this. Also, our 1148-hour cycle is actually working perfectly. And based upon that, we go down into the 24th or 25th. And then we go up into like April 4th. And then we go down hard. That's possibly the most fine-tuned we can get. But some of the super bearish cycles, the 1998 pattern, the 1990 pattern, the 1987 market, the 1931 market, which was the most bearish of all. They all have a 4-month break from December, not a 2 or 3 month break. Okay, so that's the important considerations.